Hi, I'm Christy Dutton, and I'm a loan officer here with Movement Mortgage. So I wanted to give you a little bit of understanding. We recently had a seminar, and this was our presentation. I thought I would bring it out here for anybody who missed it so that you could see it and we could work through this together. So the first thing I want to do is I want to tell you who we are. Movement Mortgage was created in 2008, and one of the biggest financial meltdowns was going on in American history. And our founders saw this as an opportunity. Step into the chaos to restore customer service and integrity in the mortgage industry. We're committed to being a movement of change in the mortgage industry, in corporate cultures, and in communities. So this is why we're here. We're here to talk about first-time home buying. Should you be buying a home right now? Would your money be better spent on buying? So the amount you're paying in rent could be better spent if you're investing it into a home. With home, you're growing equity. With renting, you're not doing anything but paying the bills for somebody else. That's kind of unfair. So this is a way for you to start building wealth within your family. It gives you deductions for mortgage interest paid. You've got mortgage payments that can be fixed to where it's not going to go up. The only thing that fluctuates is taxes. As your property increases in value, your taxes will go up a little bit. Make changes without prior approval. You don't have to go to anybody and ask if you can paint the walls. And your property value is going to increase over time, which is always a good thing. First-time home buyer tips. So we threw this in here because I wanted you to have understanding about a few things. One of the things is everything's based on a monthly debt to income ratio. So anything that you do that changes that ratio is going to change your qualification. Another thing is there are costs in there not everybody knows about. It's more than just a down payment. So one of your first ones is understanding the costs. Avoid overestimating or underestimating what you can afford. Right now, with our economy the way it is, you're getting a higher interest rate. That will come down. When your higher interest rate comes down, we will refinance you. We'll do a rate and term, which means you're not pulling any money out. All we're looking to do is get you a lower payment. If you can afford it now, you can definitely afford it then. Meanwhile, you've built equity in this home. Okay. The other thing is, don't buy furniture for a house you haven't moved into yet. Okay. Everybody gets excited when you're going to purchase your first home. It is exciting. There are things you want to do. You can't wait to do them, but please wait. Because we are on this debt to income ratio that is qualifying you within a monthly time frame, I need it to stay the same. Everybody needs it to stay the same. And we actually are alerted when you go out and buy something that is a large purchase or something that is going to open new lines of credit. Okay. Third thing, don't go solo. Use a realtor. Okay. Use your own realtor. If you are buying a home, unless you really trust this realtor, if you were buying a home and it was a listing that realtor had, the seller, yes, is going to pay, but it's going to be she worked for the sellers first. So you want her on your side as well. Unless she's somebody you were already working with and she says, hey, I've got a home for you. We know all kinds of realtors out there. Ask us who we would use. Let us help you through that process as well. Okay. Expecting your dream home is number 4. We need realistic expectations. No house is perfect. There are ways to use certain programs that will help you through that. And if you find your almost perfect house, we can work through that as well. But expect that this is the first home. It's going to be the one that starts you out on your path of purchasing more property, more equity, more money to retire with. Okay. And please, 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 when you do find your home, do not skip the home inspection. Pay for a detailed inspection so that all the little things that you aren't seeing out there in the obvious world, but underneath everything is what we need to get to. You need to know everything about the house. Okay. So here's what I always start with. First thing is credit. Nobody ever taught you the game of credit, and that's unfair because it is a game and there are tricks to it. So one of the things I want you to realize that if you do make application to purchase a home, especially if you're working with me, I'm going to look at your credit and I'm going to tell you if we can pop your score. I'm going to look at the things that you may not know. Everything about a loan is based on risk. So when you take a look at this, FICO divides the scoring range into 5 risk categories. So the higher your score is, the better rate you're going to get because you're a lower risk for them, okay? Things that impact it are current or late payments and how late the payments are. Number of open accounts you have. So how much debt are you carrying and how spread out is it? For every $25 that you've got in a monthly payment, say on a credit card, that equates to somewhere around $250 a month, say 5 accounts at 25. That gives you approximately $30,000 that you're missing out on a home loan. So you really want to try to lower that. Another thing you may not know is how much you owe on each account. So they may give you a credit limit, but the problem with that credit limit is it is only really benefiting you if it's at 30% or less. So if it's a $300 card, don't go above 90. Pay a little bit extra when you make the payment and never make a late payment. So pay down revolving debt. That's huge. That's going to free up money. Like I said, $25, 5 accounts. Now you're at $250 and it just ate up $30,000 in being able to afford credit. All right. So pay that down. I believe 30% is better. They say 50% is where you should maintain it. 24% is optimal. If you can, I believe you should pay it down to $10, let it carry over. Use the card again, pay it back down to $10, but always make that minimum payment. That'll help to spike it, okay? Did you know? Now, these are all things that you may not know. FICO scores are used not only for mortgage loans and credit cards, but for car loans, insurance, and utilities. Did you know that credit reports reflect charge-offs or collection accounts up to 7 years and bankruptcies up to 10 years? You can get a free credit report annually, no charge, without impacting your credit score. Having a minor balance without missing a payment is better than closing an account. Don't close any accounts. You close it, you've lost the history that you had. If you had that account for 30 years, that's 30 years of history that's gone. That's horrible, especially if it's really good history. Consolidating credit cards increases your ratio of debt to available credit and can lower your score. By consolidating, you're closing out a bunch of the other cards because a lot of times they will ask you that you must pay those off and close them. You've lost all that history. And using the maximum amount, like I said, on your credit card. If 300 is your limit and you've charged 300, you're losing points on your score. So now we've decided we would like to purchase a home and we want to know how to do it. So of course you're going to go to my application page, which I will give you. It's the beginning of your home journey. So here's something that's different with Movement. We like to get you approved, not pre-qualified. Pre-qualification is all about, based on the numbers you've given me, it looks like you're approved, but it's not. Once you get all your documents in, once we actually see your income, there are little things that change it. Maybe you didn't tell them about child support that's court ordered. Maybe you didn't tell them that you just opened up an American Express because you forgot it. You just opened it. So these are all things that are going to change it. And we need to see what we've got, what we're working with up front, so we have no surprises. So when you do application with us, that application page is going to tailor to what and how you answer the questions. If you're self-employed, it's going to ask you for self-employed documents. We actually are having you apply behind a firewall, so you can load your documents, and please save your password and login, okay? So that you can get back to that anytime. You'll be uploading documents there because, as I said, it's secure. That's where you're going to get all of your loan estimates, all your disclosures. So everything's going to be sent to the email that you're using. So it'll always be that email, okay? When you upload everything for me, the faster you do that, the faster I can get you a pre-approval. When we give you a pre-approval, we are known for having a reputation that it means we have seen your documents. I also send out a letter that says, I've seen your documents. I know that you're a solid buyer. It actually has helped us win contracts, even when we were just a little bit less than what somebody else was offering. So how does our process work? We have what we call 6-hour upfront underwriting. So for one of the first things we're going to do when we make your loan live, say we have you approved and you found your house. Now, this is where this all comes into play. So now we're looking at our house. We want to make sure that everything that we saw previously with the pre-approval is right. So we do a 6-hour upfront underwriting. Okay, that means within 6 hours, when the underwriter receives it, she is going to review it and give you a list of conditions. That's our first list with the underwriter. Then we have 7-day processing. Based on what the underwriters asked for, they have 7 days to get this processing documents in and back to the underwriter. Once we've gone through this, it may take a couple times of the underwriting and back to processing based on not getting all the documents in a timely manner. And then when we close, it's 1-day closing. We balance within that 1 day. They have the documents. They're sitting there waiting for your closing. So it makes everything really easy. And I don't have to search for documents and put a huge delay in the front. I can actually, I think we were averaging, at one point I was averaging 21.9 days to close. Now that doesn't mean every deal closes like that. That means that's what my average was, but that's only based on the fact that I can move quickly based on what you've given me. Okay. So once you make application and I've gotten a chance to look at your documents, I'm going to look at the big picture with credit. Credit's going to tell me where I should guide you. If you're VA, if you were a veteran, obviously I'm going to tell you to go VA. Conventional, everybody has always thought was the best program. Not necessarily, but there are good points with conventional. These also aren't 20% down programs anymore. They used to be, but they're different now. So let me take a look at credit, your documents, and we will work together to show you which one is your best option. Now, like I said, renovation loan, it might be a good one for you. Maybe you found the perfect house, but the bathroom's a little underwhelming and you want to update it. So it can be as little as $5,000. It can be a streamline all the way up to, I believe it's $32,000. And anything above that, what they do is you close on the loan with whatever the offer price was. With the improvements you're going to do, we get an inspection or an appraisal that shows us this is before, this is what it's going to be worth after. And we lend to you based on the finished product. Still closes within a timely manner, okay? And bonds, tighter ratios, but there are options out there. Everybody loves options. So these are the questions you need to ask if you're talking to other lenders. Will an underwriter review my loan application before or after I find a home? If you are self-employed income, Movement is going to step in and we will underwrite you up front if we have any questions. If you have, what do I want to say? I can't think of the word. When you have varying income, that's when we want to get you in front of an underwriter. How long does it take for the underwriter to review my loan application and give me a decision? This is where we get them beat. 6 hours. 6 hours with us. So next one is how many days will it take to process the loan service once the file has been fully underwritten? This is where we have the answer of 7 days. We are all about our timelines. We don't like to be late. Our metrics are set up to where we do better when we're closing loans faster, of course. Who doesn't want to close faster once you're buying a home? If any delay is caused by the mortgage company, will the mortgage company pay any costs associated with the closing late? Yes. If we are the ones that caused it, we will step up and cover any per diem costs associated with closing late if we've caused the delay. Will this experience be so good I will want to refer the loan officer to at least 2 friends? Absolutely. There's no doubt. You will be as excited working with us as we will be working with you. Now, loan comparison chart. This is where we talk a little bit about the differences in the loans. Remember, I told you that conventional is not just 20% anymore. You've got a home ready, which is 3% down. And in this document, you can see the loan purpose, you can see the property type, and down payment that's required. Okay. Those are all helpful things. And those are all the things we take into consideration based on where your credit score is. No one program is better than any other. Some are less risk. Some do not have as tight of appraisals as others. But an FHA loan makes perfect sense, especially if you've got two people that are working and we're only using one of them on the loan. It has higher debt ratios, and the debt ratios are what we talked about. That is a monthly calculation, okay, that we use. Okay, so you're pre-approved. What's next? You get to shop. And you get to shop with a letter that says, hey, I've looked at their documents. They're good to go. All right. So one of the great things about us or about me is I work 7 days a week. I work when you need me. Okay. So if you were trying to put in an offer and you need somebody to update your pre-approval because your pre-approval is showing your hand that you've got more money than what you're offering them, let us know. We'll change the pre-approval amount so that you can make your offer without showing your hand. Okay. You find the home of your dreams, you make an offer on it, and you close on it with a little help from me. So when we get to preparing for your home loan, this is our 10 do's and don'ts. Don't open that new line of credit or apply for any new kind of credit. As I said, we have a debt notification. So if you apply to get a new car, that's going to change your ratio. It will let us know. Then you'll have to at least give us a letter of explanation. Did you open the credit or you didn't? Keep all your existing credit cards open. Do not close anything. Don't max out or overcharge any existing credit cards. Now, if you need to go to the store and it's going to cost you $30 or you needed to put gas in your car, that's not a big deal. That's fine. Don't change jobs. I once had somebody run in at the end. I was doing a save a deal. I was able to do the loan for him. And a save a deal means when another lender has kind of dropped the ball and I'm picking it up and throwing it into home plate for a home run. The gentleman quit his job. He said, wow, this is stressing me out so much. I had to quit my job. My first response was, go back and get it because I can't do a loan without a job. So keep your job. Don't change it. If you have to change it and it's in the same field, or you'll be making more money, or you're going from a variable income to a salary income, or if you've gotten an offer letter, those are all things we can work with. So if you've got a new job coming up, it's going to be a higher income. You have the offer letter. We'll take your offer letter and you'll need to get at least one paycheck at the higher amount before you close. But stay in touch with your loan officer. Bring us all of that information. We want to help and update your file and keep you approvable. Okay. So don't consolidate any of your credit cards together. Don't consolidate everything into a zero interest for so long because you've lost all that history. Do pay off collection judgments or tax liens reported within the past year. Now, do that before you come to me, okay? Then I don't even have to pull it and see it. It's not on your credit report, and I don't have to validate that it's been taken care of. Don't pay off any collections unless I tell you to. Now, I may tell you to if the underwriter or the loan program guidelines say we need to, but if you touch a collection report that hasn't been touched and hasn't been reporting on you, at that time, they're going to start reporting because they know that you've reached out. Don't settle. A settlement is you're not giving them the full amount and it's still a ding, okay? Make sure that you keep any documentation you have for anything that you do pay off, judgments, tax liens, all of that. Do stay current on all your payments. As I said, there's nothing I can do for a late payment, and that's going to affect you for up to 2 years. And call me before you make any financial decisions. If your car tanked out and you're going to need to go get a new one, well, then we're going to have a conversation that says don't get one over the current payment that you were already making, because as I said, it changes your debt to income ratios. So we talked about how people have a little bit of concern over FHA loans, okay? FHA loans are not a bad loan, and they are not insured by HUD. What they are, it is where HUD has said, they have followed our guidelines. We see that they are acceptable. HUD's not responsible for it, but they do have a 1.75 funding fee that goes to HUD that sits there in case there are any defaults on loans for FHA loans. That helps to buy them back, Okay. Now, FHA loans take longer to close. These are our myths. No, they don't. Upfront underwriting helps ease the closing. Qualified clients arrive not only with pre-qualified, or we do pre-approved, but underwritten by an underwriter. So we eliminate all that worry. It still stays within our timeline, 30 days or less. Myth number 2, that they frequently get down. No, they're not. If you do our underwriting, we've already reviewed your documentation to see if you qualify for the loan. Our operations staff has credit approved the qualified person at this point. We know that we're going to get you closed. Myth 3, FHA appraisals are pickier than conventional. Out with the old and in with the new FHA appraisals. They're generally updated to require only minor repairs that are almost entirely health and safety related. Most big things that FHA requires are in terms of retrofit to sell your house. So if you've got an old farmhouse and all of your wiring is outdated, not up to code, that's something that they're going to pick up. If you have lead paint in the house and they see that it is peeling or chipping, that may have to be taken care of. But those are simple things, not too bad. Now, we talked about the funding fee for FHA. There's also what they call PMI, which is mortgage insurance that you make monthly payments on. So with FHA, our monthly payments have always been at 0.85. Okay, that's it. Anybody that puts down the 3.5%. So they have changed that. All right. They've also changed the LLPAs, which is loan level price adjustments. So those who can qualify can buy their first home without paying the LLPA fees. Those are fees that affect our rates that you normally don't see. Another thing I want to let you know, as far as your rates go, you don't have a rate when we get you pre-approved. We are using the rates that are available at that time, but you will not be locked in. You can do a lock and shop, which generally costs more money, because with a lock and shop, you are looking at keeping something that's sitting there until you find the house, keeping that rate. And it costs money to hold on to a rate. So that's why they're generally a little bit more. Okay. So on a first-time home buyer whose income is equal to or below 100% of the area median income, or 120% below the high-cost areas, okay, they are not subject to LLPAs and can save money on their monthly mortgage payments. We're trying to make it more fair. Fannie and Freddie are helping us here. So one of the things people ask or don't know about are seller concessions. So certain programs have limits on what you can do. So Fannie and Freddie, which are our conventionals, okay, they will let you do up to 3% of seller concessions. That's the most you can do. FHA, you can go up to 6% of the purchase price for seller concessions. Now that means that the seller can give you 6% of your purchase price as a concession. A lot of times, perhaps your realtor will offer more money so that they can grant you that concession. Your realtor is going to be really good at this, and they're going to understand all of this. This is the guide that they have as well. VA is going to give you 4%, and USDA, which is a rural loan. If you live out in the country, and there's an eligibility chart that shows us when you're looking at properties, if it qualifies, they give you 6% as well, just like FHA. That can help a lot. I mean, there are several things. It can help with the 30 days of mortgage interest charges, because that's part of your closing. Permanent or temporary interest rate buy downs. It can help to buy down your rate. So if you were at a 7, now you're at a 6.5 with their concessions. It can help closing costs. There's several things, okay? So let your realtor help you with this, and you can shop fearless. So once we get all these things going here for you, you don't have to worry about it. You know you can afford something within this area. If you find a house that's outside your range and you want somebody to take a look at it, call me. Let me know. I found something. Maybe the taxes were less money. Maybe it didn't have an HOA. There are variables that will change what you're doing. 20% is not always the best amount to put down. You can actually get a very low MI payment and get a better rate if you let them make a little bit of money with the MI. So we know all the tricks, the ins and outs. We want you to trust us, and we'll help get you there. So let's be realistic. There are no perfect homes. That's why we offer those renovation homes as well. But remember, even with no perfect homes, let's be realistic, because even if you're not going to make it your dream home, or everything is great on this house except for that bathroom and we're going to take care of that, we still want it to be a house that is perfect for you and your family to grow and to build on. And that's it. Basically, these are my partners that I work with here in my branch: Rick Theron, myself, and Michael Float. We have our information there. Give me a call. Give me a call if you want to talk about it. I'll give you my site. Let's get you out there shopping and see what you're pre-approved for. No fear. There's no fear on even pulling the credit. Okay? We got you. Give me a call and have a great day.